I'm Wes Schroll, founder and CEO of Fetch Rewards, and this is Fetch Focus. We're here today to talk a little about a question that we're always getting. How is ROI going to evolve and change from where it's traditionally been, which I would argue it's been pretty stuck for the last couple decades, and where is it going? What's the timeline of how quickly it'll get there? What are some of the driving factors that will fundamentally reinvent how companies are needing to think about ROI?
When we talk about ROI, everybody defines it a little bit differently by extension, right? So if I'm looking at retail data, I'm looking at it one way. I might have a marketing mix model. That has some inherent biases in it as well. So what we're trying to do, and what we have the opportunity to do at our size, with our scale, with a different approach, is provide a more specific ROI that is truly assigned to incremental sales. It's no longer artificially associated with ad spend or impressions. It's actual proof of what's sold on the basis of an action taken.
And I imagine retailers want that, right? They want that power, they want that control, and they want to be able to maintain that direct connection to the end user, to the end shopper, which that model is, as we are seeing at Fetch, is breaking and it's disrupting.
It's broken. I mean, it's been always broken. The idea that you can actually attribute marketing spend to what the consumers are actually doing has not worked since it started. You can get broad trends of consumer spending, but to isolate out, is that related to supply challenges, pricing pressure by your customer, seasonality? You haven't been able to track the actual individual in terrestrial spending the way the internet's been doing it for 20 years. And if you look at internet marketing, because you can track the user all the way to the purchase, you know what your revenue is, what your free cash flow is, and you can directly attribute it to your marketing. You can actually figure out what your ROI is pretty accurately. The ROI in the terrestrial world isn't really an ROI. It's an estimate maybe of the efficacy of marketing spend, but at the very best, it's an estimate, and a highly unreliable estimate at that.
Yeah, and I think that's a very important point, right? Like, to be able to do real-time decision making, which I think historically brands have not been able to do. Brands are at the mercy of getting data from third-party providers, making decisions 3, 6, 9 months later when the product is basically not relevant anymore, or you've spent a ton of money putting something out there, but it's interesting to see how data is effectively the right data with the right analysis is changing decision making, which is what it's meant to be all along.
So one area that I'd love to just talk about is, with the emergence, and especially from COVID, the acceleration of shopping going more and more online. One of the things I think we've heard from a lot of brands and retailers is this difficulty of, are those incremental sales? Are those sales that are taking place on these new services incremental, and how do they think about ROI there? So I'd love your perspective. You obviously ran the technology of one of these companies.
Yes.
What do you think is the ROI, the benefits that they have, but also some of the drawbacks and how brands are thinking about it?
Right. The drive online is clearly happening. It still accounts only for very, very low single-digit, very low double-digit percentages of consumer spend. The challenges with online, the benefits are clearly convenience. Convenience and safety, without a question, are super important. The challenges is clearly price. Those services are still very, very, very expensive. From the brand's perspective, it's another retailer, it's another retail channel. Even though they often are not stocking their own goods and they're shopping in other channels, the relationship that the consumer has with the online services are less about the retailer and more about with the online service. And that's generally what they don't want to say, but that's usually how consumers view it. For our partners, we're retail agnostic. We transcend any retailer, whether it is online and the online delivery services, whether it is the terrestrial traditional consumer product stores, whether it's big box discounters, whether it's convenience. We see all of them. And at the end of the day, we don't believe our brands really care how they sell their product. They want that relationship with the consumer, and they want the consumer to buy and enjoy their product.
One of the things that has been just a step change difference is now that we've gotten to the scale, over 10 million monthly active users across the country that we can influence, we're talking about touching enough dollar sales. I mean, we're capturing on an annual basis over $100 billion worth of retail sales. I mean, we're closing in on being one of the top 5 retailers by dollars that we have influence over and can see. And what we're hearing back from our partners time and time again is we run a promotion and they can see it in their national results, especially if we're targeted on a certain maybe new SKU that's being launched. They can watch it and then they do something on Fetch and see it in other third-party tracking sources. And I think that's actually been one of the reasons why our retail vertical is standing up so quickly. You have these innovative, forward-thinking retailers that own the point-of-sale system, and they know exactly what's flowing through those registers on a week-to-week basis in every store. So when they go and do promotions with us and we tell them, hey, we saw this incremental lift, they can go to those stores and say, hey, did we see more sales this week or not? And when the answer comes back resoundingly yes, they believe this methodology in a way that I think brands have yet to get to because they just can't quite touch the results in the same manner that a retailer knows that we had more go through our POS system than otherwise.
Oh, it speaks volumes that our partners, our retail partners, can validate our numbers. Like they can absolutely validate our numbers. And it's a strong testament to how well this works.
Well, and our brand partners too, right? Confidence comes with scale, comes with the ability to show them the results. And the fact that they can now measure it in those imperfect, traditional, third-party or very biased sets of data, that then gives them confidence that the underlying data that we provide, which is, oh, by the way, an increasing percentage of their national footprint and their own national sales, it just justifies what they're doing.
Well, and go one step further than that. Not only are we telling them that, hey, we had 17% incremental sales this week, and you can see it in your POS system, because they have that data already. They know what happens in their 4 walls better than anyone else. What we can then do, though, is give them an after-action report that shows, and those 17% sales, they didn't magically appear. Customers weren't spending 17% more on groceries this week because they were more hungry. Like, that doesn't happen. We can show them, here's where it came from. Here's what categories that you missed. Here's what categories shifted over to you, which exact items. Because that's when I think when we go back to the online sales of some of these platforms, brands are looking at it as incremental sales just because, yes, they're moving more volume through a channel that actually is ordering pallets. But the difference is, where is that consumer? Like, no one's spending more money on food all of a sudden. Sure. I mean, maybe they did for a short period of time during a pandemic, but when you're looking at it, you can't count those sales as 100% incremental. And I think just no one has had the data to challenge that way of thinking to say, yes, you did move an incremental $200 for that household to an online channel this week. However, they decreased their spend by $220 over here because they had to count for the delivery fees, and your net is actually, you're just trading.
Oh yeah, these are very mature markets. These are very mature competitors in the market. They are not, it's not like an introduction of a new product that's growing at 10% a year. So when we're able to actually take incremental spend and drive it to our partners, it's at the expense of their competitors. We will increase the share of the wallet by making things more attractive and better pricing and better value. But a lot of our value is taking away spend from their competitors.
So our average consumer today, as you guys know, is scanning 25 receipts per month on average. So that means we are capturing almost $13,000 to $14,000 of disposable spend that a household has, which is getting close to 90+% of disposable spend. And that information is down to SKU level, includes payment method, it includes price that consumers are paying for, all the different locations, so we can see how diverse people shop across numerous channels, numerous stores. So why don't you talk us through a little bit about how are we utilizing that asset, that one-to-one relationship we own with the consumer, where they're engaging with the app on a daily basis, they're opting in, providing that information. How are we taking that information, turning it into effective programming that then can produce an ROI that's actually tracked?
Sure. So basically the way the system works is that the consumer digitizes the receipt and we see what they buy. We then programmatically, in real time, create offers for the shopper, and that is to selectively incentivize various purchases. And so the way we decide to do that is basically on previous purchase history. And we understand where that consumer is in the demand curve, whether they're a very, very loyal customer, and our strategy is to protect that loyalty of our partners, whether that consumer switches between brands, is either price sensitive or time sensitive or convenience sensitive, or they're in the market, but they haven't really embraced our partner. And so we'll very selectively choose to create an offer for their eligibility. And so let's say we have 1 million shoppers who are eligible for an offer. We will randomly sample a small but statistically relevant sample of those consumers and withhold that offer from them. And this is essentially the same technique that medical devices, medical therapies are used to measure their efficacy. And then we'll track those users over time. And we can very, very accurately measure lift and the efficacy of those offers and campaigns. So it normalizes and accounts for things that are largely outside of your control. They account for supply issues, seasonal issues, pricing pressure of competing products, pricing incentives that exist in the marketplace, and it normalizes all of that out. And you can directly and very accurately measure the efficacy of that offer. And from that, it's very easy to measure actual real ROI.
Yeah, I mean, part of that is empowered by just the approach that we take at the top. The fact that it is connecting with the shopper where they shop and with what they consume. So by taking a very retail agnostic approach to it, it allows us to connect with where they are. The fundamental belief that it's easier to get a shopper to move up or down, left or right on a shelf than it is to drive across the store for one item at one moment in time. It's just not sustainable. We see that in the data and the differences in terms of the volume of transactions that we're able to capture as a result.